This is Real Estate Rookie show number 66. My name is Ashley Kerr, and I am here with Tony Robinson, and today is the Rookie Reply.
What's up, Ash? How was your day going?
Pretty good. I'm still having major jet lag from Hawaii. I was up till like 3 a.m. and then slept till
Yeah,
6:30, and
so funny.
I don't know what is going on. Yeah.
I was up at like almost midnight my time. I sent you an email and you replied in like 2 minutes. I'm like, what the heck are you doing up right now? So that's the downside of spending a week in paradise.
I'm like super productive though during these late night hours. Maybe I need to just change my whole sleep schedule.
Yeah,
I've been getting so much done. I don't know if it's because the house is quiet. So, you
totally.
know, even, if the kids are at school or my husband's out in the barn or whatever, and I'm still getting texts or emails, but so just
Hmm.
everything being quiet, I can just focus on stuff, I guess. But
Yeah,
it's
the
been
early
fun.
mornings and late nights are like the best times for sure.
Yeah, yeah. So what do we have? What question do we have today, Tony, from Facebook?
Yeah, today we've got a really cool kind of Facebook question. It kind of touches on a few different things, which is why I thought it might be a good one to bring in today. So I'll kind of read through it and Ash, you and I can kind of share our insights on what we think or what our thoughts are. But today's question is, hey all, I'm a new investor with two burning questions that are keeping me from getting started. Hoping for some help. So the first question is, I live in the Chicago area and don't like the market or the landlord laws here. People in general are moving out, not in. I do like the Texas market a little bit better, but my challenge is, how do I close on a property sight unseen? My initial thought is to partner with the real estate agents. They could pull comps and visit the property, take pics and videos, etc. And then I could call back to handle the closing. Does anyone know of a better way to do this? Now, so that's question number one. So let's pause on that question first, and then I'll ask the second question next because they're slightly related, but not quite. So, have you bought a property sight unseen, Ash, and how did you kind of get past that mental hurdle?
I have not. I was
You
just thinking as
haven't.
you were reading the question, this is like totally up your realm. Yeah.
Okay.
Every property that I've purchased, I've been, maybe in a property I couldn't get into one of the units or something
Mm,
before I put in my offer and closed on
yeah.
it. But yeah, pretty much every property I've been able to see. I have put in offers without seeing properties, but actually closing on a property, I've been able to go into all of them. So take it away, Tony.
All right,
This
yeah.
is
Let
your
me let
time
me
to
take the
shine.
baton here. Yeah. So I get this question a lot, right? Like, how do you buy a property without seeing it in person first? Now, I think the person's name who asked this question, his name was Mitch. Now, Mitch, you've never purchased a real estate investment property before, right? Like you've never done a heavy rehab, you've never managed a property. You're new in every sense of the word, when it comes to being a real estate investor. So the process that I follow, and I'll kind of walk you through the process and give you my explanation as to why. But the process that I follow when I was buying out of state, and honestly, even now, I buy properties that are like an hour and a half away from me, and I still don't go see them before we close a lot of the times. But my process is, once I find a property that I like, I run my analysis and I make some assumptions about the rehab costs might be. And you can get these assumptions from different places, from other investors. You can talk to contractors. There's different ways to come up with your rehab estimates. You could buy the BiggerPockets book on estimating rehab costs. There's a lot of different ways to make that happen. But I run my analysis when I see the property, and then I decide what my offer is based on the assumptions that I made. If the offer is accepted, anytime you have an accepted offer, you always have a due diligence period to go out there and complete your due diligence on the property. And now, again, since I'm in states, multiple states away, I'm not going to go out there and do the due diligence myself. So I send two people, really three people, to that property to help me with my due diligence. I send my agent first, obviously because they're going to see it before we even submit the offer, and they'll send me pictures and videos, kind of give me the story behind the property. Once the property's under contract, I send a property inspector, and then I send a general contractor to walk the property as well. So at the end of this, I get an opinion from my agent, who is, someone who's experienced in that market, who's bought and sold way more homes than I have. I have the actual inspection report from a property inspector whose entire job is to walk through the property and point out things that are wrong. And then I have a general contractor's bid, which shows me not only everything that needs to be improved, but also the potential costs to make those things happen. So after I have all three of those people walk the property, if I am someone who's never purchased an investment property before, how much value will I really be able to add above and beyond what the realtor, what the property inspector, and what the general contractor have already provided? The only thing that I will be able to do by walking through the property is look around, kind of nod my head, and make myself feel better for actually seeing the property in person. But I'm probably not going to add any value in addition to the value that those three people have provided already. So that's always been my mindset, is that I know what value I bring, but I also know what value my team members bring when we're trying to buy these properties. So that's how I approach it, Ashley. So I'll shut up for a second because I was on a roll there.
No, that was really good. And I think that also goes hand in hand with people who, want a property in their market, even though they have property maintenance or they, have a handyman. It's like, okay, if the toilet breaks, why do you need to live near that house? Because you're outsourcing it anyways. And I think you just gave a great example of that. You have your boots on the ground to take care of it so that your property can be anywhere in the world. And you can get pictures, you get all the information from them. You just have to trust them. And that's why it's so important to build your team. So Tony mentioned you have your realtor, you have your home inspector, and you have a contractor. So really vet those people, interview as many as possible. And for the contractors, you can get multiple bids on a property. But my question back to you on this, Tony, is okay, it's a really hot market. Are you doing this, you're putting in offers and then doing all of this during the due diligence period, or are you sending anyone in before you actually even make the offer? And are you waiving inspections? Like here, if I was to put an offer on an MLS property, I would have to waive the inspection to really get a great deal.
Yeah, my agent's always going to be the person that sees it before the property closes. And honestly, not even always, right? It depends on the market. And in the Smoky Mountains, when I invest, my agent will usually go through and send me some photos and videos first. When I was in Louisiana, that wasn't the case. So I think it depends on your market, and you got to understand how competitive your market is. If I'm buying sight unseen and it's my very first investment property, I'm not going to waive the inspection clause. Like I think there's just too much risk. I would feel that that's too much risk as a new investor to do that. But if you've got maybe a partner that you're going in with that's got a ton of experience and they can kind of walk you through the ropes, then maybe you can be in a position to do that. But that's usually how we played it.
And I think the second part of this question too has to do with off-market deals. So if you're getting an off-market deal too, you definitely have a lot more wiggle room to do an inspection because you're not going to have a ton of buyers coming at this person, hopefully, because you found it off-market. You're the only one that knows about it right now. So that's definitely something to consider. But Tony, take us to the next part of this question.
Yes. So the second part of Mitch's question is how to best finance off-market deals. He says, I've read several books, listened to BiggerPockets podcasts, recommending looking at small local banks, but how long does it take for them to close? Has anyone had success using them for your off-market deals, or have you maybe lost any deals because they took too long? Most of the information I've gathered so far says it will take at minimum 2 to 3 weeks using those kind of lending options. Is that what you guys are seeing? So Ash, I know you've gotten creative with some of your kind of off-market, seller financing type stuff. So I'll let you take this one first.
Yeah, and Mitch, the first thing I have to say is it really depends what market you're in, because in New York State, you're not closing for at least 30 days anyways. So 2 to 3 weeks to get your money is not bad at all. So definitely this will vary upon market, but you can look for banks that are lenders that aren't actually banks. So in Texas, I know there's one called Noble Mortgage, and they just do lending, and they do hard money. So you can go there and you can get a loan within 1 to 2 days on a property. You bring them the deal, they'll vet you, they'll vet the property, they'll give you the money, you close in cash. Then after you've rehabbed the property, you can go and refinance with them and get the long fixed rate, the 30 years, low interest. So definitely look for places like that. I know there's one in Buffalo too. I think it's Nickel City Lending. So definitely just do a Google search of lending companies in your area that a lot of these focus on investors. They're very investor friendly, and you may be paying, really high interest rates to get that cash offer up front, but definitely worth checking out, especially if that's your only option. And you know what? If you're paying 12% interest and your numbers still work, do it. Do the deal then. Just make sure that it will still work into your numbers and you're not going to lose money and you're not going to be able to afford, and also that you still have cash reserves in place. But that would be my first recommendation, is looking for those local lenders, not even local banks, but local lenders in your area, because they have a lot of creativity in their financing that they can offer to. And then the next thing would be is just asking those small local banks, what can you offer me? I had one that gave me a 90-day unsecured loan before to do a cash offer on a property. And then there's private money. Is there anybody around you that would, be interested in investing in real estate but maybe doesn't have the time? And Brandon Turner gave me this tip. Instead of asking the person, hey, Tony, do you want to let me borrow money to buy a property? You can say, hey, Tony, I'm looking at buying this property. Do you know anyone that would be interested in lending money on this deal? So you're not putting the pressure on them to answer right away, and it's not uncomfortable for you because you're having a heart attack waiting to see if they say yes or no. So I really like that, is how he it brought it up to their attention, but wasn't directing it right at them and putting them on the spot. And then the last thing is if you can get a line of credit from somewhere. So if you have a primary residence, do you have some equity in it that you could put a line of credit on that property and use that line of credit to purchase? And then Tony, you had mentioned seller financing. That's always a great option, and always ask. Doesn't hurt to ask anybody who's selling a house if they would be interested in doing seller financing. That's like one of my top 3 questions. I ask the seller or I ask the realtor, and then I know what my options are. And you can always come to the table with different options. So an off-market deal, I usually do a letter of intent. You just Google letter of intent, you'll find a million samples. And basically it's just saying, my name is so-and-so. I would like to purchase this property at this address for this amount. It will be a cash offer, close in 30 days. Any contingencies, any clauses or anything special in there, you could add that in there. And also it's, this is contingent on an attorney's approval. But you could do 2 options. You could do a seller financing. Hey, I would be willing to pay you $100,000, but you would, I'd put 10% down and you would hold the mortgage on the rest, and I would pay you 8% interest. Or you can take my cash offer where I'll pay you, a different amount of money and I'll get the cash. And then third option, I'm going with the bank financing. This is what it is. And you can tailor them to make them beneficial to you. And then you give them those options and then let them pick what is beneficial to them too. And go from
Ash,
there.
that was like a master class in creative finance. I'm going to call you the creative finance queen from now on. That was, you hit on like everything. I guess the only thing I'd add, like I purchased a property from a wholesaler once using a line of credit against some equities, some stocks that I owned. So most, E-Trade, Fidelity, a lot of those places, if you have enough stocks, they'll allow you to pull the line of credit against, 40-50% of whatever that value is. So, and that works just like cash as well, right? And the interest rates are actually pretty low.
I'm so glad you brought that up, because that is a really great tool. My one partner, his wife did that on her investments. She got a line of credit and it was crazy low interest rate. And it's different than getting a 401k loan where you're actually pulling your money out. So your money is no longer earning on those investments, where your money is staying in your investment account and you're just getting a line of credit. And that investment is the collateral instead of a property per se. So
Totally,
yeah,
right?
great point on that. Yeah.
Yeah, because if your stock is gaining like 7 or 8% per year, and you're only paying 2.5%
Yeah.
on the loan, it works out pretty well still.
Right. Yeah. Yeah. And then there's self-directed IRAs, and there's all these other different rabbit holes you can go down. But I think the ones we mentioned are the easiest to get started into, but definitely lots of options out there. Go to the BiggerPockets forums, ask other investors what they are currently doing, especially in this market, to make those cash offers.
Yeah, awesome. Well, Mitch, I hope that answers your question, brother. I mean, I feel like Ashley and I gave a lot of value there, and I love when the questions like right up our alley, right? It's like a
Yeah.
softball that we can just kind of knock it out the park with. So,
Yeah.
I
And
think
a
that's all.
two-parter. One question for you, one question for
Yeah,
me.
yeah, yeah. Yeah, we need more questions like this.
Well, thank you guys so much for listening today. We hope you took some value of it. Make sure you join our Facebook group, The Real Estate Rookie, and we will be back next Wednesday with an awesome guest. So make sure to tune in. I'm Ashley at Wealth from Rentals, and he's Tony at Tony J. Robinson. Thank you guys for listening.